investors in India, Samir Arora, founder and fund manager of Helios Capital. He joins us from Singapore. Welcome to the show. Samir, my colleague Shailendra Bhatnagar is also here with us. But before we come to you, I have to just take some headlines from the political stock exchange that could both feed into the debate and also may play out in the markets, which are mostly in the green, except the much hammered PSU bank index. TDP sources are telling the India Today network that it is likely, viewers, and this is likely, don't take it as fully confirmed as yet, but Chandrababu Naidu is likely to seek the Lok Sabha speaker's post, something that the other ally, the JDU, Nitish Kumar, are also likely to seek, and key ministries such as road transport, rural development, health, housing and urban affairs, agriculture, Jal Shakti, IT and communications. IT and communications, remember Chandrababu Naidu amongst the earliest administrators, politicians in India who had taken a fancy to IT, as well as finance, but the state minister of finance position and some other state minister position. So the political stock exchange still active, Samir. The last cabinet meeting of Modi 2.0 is underway. The INDI alliance is also supposed to have a meeting yesterday. They were pretty enigmatic yesterday, but by consensus, and we heard Prime Minister Narendra Modi also speak at the BJP headquarters yesterday, Modi 3.0 is coming back with a diminished mandate. The markets are up today. How are you reading the mood of our markets at this point of time? Samir, I want to begin with that.
So, my assumption right now, sorry, Mr. Chandrababu Naidu wanted all those ministries or one of those ministries?
All of those. So,
all of those.
And we still haven't heard the list. We still don't know what Nitish Kumar is going to seek.
No. So my assumption till 1 minute ago was that the government is being formed with BJP and with the face of Mr. Modi, and that these guys will get some state packages, this, that, and at individual party level, they might get something or the other, but not that you get 9, 10, whatever number you read out. And so with that assumption, my thing was that you may have a small shift, tactical shift on the policies, but 80-90% of the policy should be the same, plus minus. Also because Mr. Chandrababu Naidu was sort of a forebearer of the things that Mr. Modi is doing on digitalization and technology and smart cities. In fact, I think when I was in Alliance, I forget which year, must have been 2000 something, I went with Citibank and we all FIIs went and met Mr. Naidu. And that time the story used to be that he uses PowerPoint to make presentations to foreign or to investors in general. So if that is the case, it's not a big shift. On the margin, you may do something to help either the rural distress or to give money or to cut taxes. And that is not in a big way a substitute for what you are doing. But you basically adopt that program also, and you let either the fiscal deficit go up 20-30 basis points, or you use the new sources of revenue like RBI's dividend, or maybe selling off some PSU, some of them are non-controversial, or some other way, or even if you let the deficit go up 20 basis points, who exactly correlates decimal to decimal how the targeted reduction in fiscal deficit should be. So that is my operating assumption 2 minutes ago. You came up with this new theory.
Okay, but Samir, we've seen a recovery today, and we saw obviously the reaction yesterday. But broadly speaking, how do you see this election outcome impacting the near-term outlook for the stock markets? Because perhaps short-term we will continue to see volatility till things settle down.
No, but I think that I thought or think, and it's already being reflected. I even said it yesterday that I think the market, you will not see much of a fall. Market means not a particular stock, PSU, non-PSU, but the market itself, because the market is quick to adapt and suddenly levers takes the market up, or ITC takes it up, or some other stocks take over the leadership for some time. That's why big picture we've always believed in a little bit of diversification. But the market itself would not have minded and is not minding if it's the same government and sort of the same faces, other than tinkering with the policies. It is different. This is not the same as 2004, where there was a new government. The reason for that is if a completely new government comes in, then you have to understand them a little bit. And more than that, mostly those guys, even if it is just cosmetic, they change the current programs, rename them something else, relaunch them as their own programs with some changes. And these things then take time, 6, 9 months. But if it's the same government, why would you stop things which nobody would object to, which is, say, giving orders to defense, localizing defense production, or PLI scheme, or even infrastructure? What you want, or what the public or the voters want, is a few more things. Those few more things need not be this or that. Either I will do capex or I will give money. For example, if you see the difference in our stocks, it looks as if the government will tomorrow stop everything on capex and move everything to spending money, and basically themselves change 100% of their philosophy or commitment after seeing Mr. Modi last night reaffirming all those old things only.
Absolutely.
Samir ji, namaskar. Shail this side. A very warm welcome to you on Market Masters. It's always a pleasure to host a smiling face at a time when there is extreme volatility. The markets are in a deep shade of green, probably looking at you, whereas you are, singing the blues in this lovely blazer. Be that as it may. Sir, the issue was that a lot of PSU stocks had taken a flight of fancy. And the ultimate, how should I say, thesis of the market is that we are all slaves to earnings. So earnings were compounding 15%, stocks were compounding 15% a month.
Yes.
That was the problem. And of course, Mr. Modi has said that defense will remain a priority. The point is, it was just overblown in terms of how the stocks were moving over the last 2-3 months or so. So while commitment remains, prices may sort of remain sideways to down for a longer period of time.
So I agree with some of that. I agree. What I was saying was that from a market point of view, even if we change a few PSUs, we feel it's too much. You don't go and buy a stock which is up 20% in the same time. There is a third sector of companies which are not affected by government, which were cheap otherwise. For example, why was ICICI Bank down 10% yesterday? Why was Zomato down at 1.15% yesterday?
Yes.
Why was HDFC Bank down 10% in the US market? That is just murder of hard-earned money. You can sell something down 10, 15 to buy something down 5. You don't have to buy something which is up 15 today. So mostly the guys who may have sold any PSU stocks yesterday, in theory, have not been able to go and, you go and buy some consumer defensive stock up 15%. That means this transition has costed you 25 to 30% in one day of, maybe it's not the same guy, but collectively it's the same FII or mutual fund. You're selling something 15% down and today buy something 8-10% up. That's a 25% difference in one day to change your portfolio to the new environment, when in a year you don't make 15%.
Absolutely.
I was saying that transition makes no sense. And on the PSUs or whatever, if we have to change our theories, we own 35, 40 stocks. You change 5 stocks, you are ready for whatever is the new environment. You don't have to sell 25 stocks. And those 4 or 5 stocks, sometimes you change, sometimes you reduce the weightage. But there is no need to do it today. It is better to do it when Mr. Modi takes, becomes the prime minister or does the swearing in, and then you say that 6-8 out of that 15 ministers are the same. So that was my thing. But of course, if many new guys come in and it looks a big khichdi in that sense, even though it's only with 2 parties, it's a different game. But as I said, I was assuming that you are dealing with two allies, and since both are state chief ministers, they won't want to leave that. I can't imagine. Well, I don't know, but do you think? I didn't realize that a speaker is more powerful than the state. I mean, and then a chief minister.
Certainly, Samir, and remember that a speaker's vote, who ideally should have been neutral, actually cost Atal Bihari Vajpayee his premiership once. So we must keep that in mind. You know, you made that point about priorities and a shift. I just want to relate something. Look at the verdict in Andhra Pradesh, and Samir, through you to the viewers as well. The verdict in Andhra Pradesh went against a chief minister and a regional party which has done only one thing, which is a welfare state. The extent of welfare and subsidies provided by the outgoing government in Andhra Pradesh was phenomenal. He was below the radar. He didn't come to Delhi. He didn't do media and press interviews. But it's actually one of the biggest welfare states in India, and he lost. And when you listen to people on the ground, why did he lose? Because they said he didn't do infrastructure. The state does not even have a fixed capital for itself. Amravati's development has been stalled. So just like in Delhi, Samir, we are seeing the expansion of the welfare state under the present government, whereas the previous Congress-led, the late Sheila Dikshit, built flyovers which still exist. But I'll come back to the market and the question I have for you. What happens to Modi stocks? And you know, I'm talking about the PSUs, I'm talking about the capex linked plays, also for example telecom stocks which were hoping for that there will be a tariff hike. What is the outlook on those Modi stocks?
I think that, you know, what has happened is that the stocks that did well got labeled as Modi stocks, some of them. For example, power sector. It is worldwide view that power is going to be in shortage because of EV, second because of AI, third in general, power everywhere to every home, this, that. And so some of these things are not going to change. But as he said, a little bit of the narrative kind be trimmed a little bit. But some of these PSUs will be okay and some won't be. For example, nobody was really imagining till say Monday that some of these defense stocks are going to be privatized, right? So, but the stock fell 20%. Nobody is thinking that they will get lesser orders. But some of the hype may have been in general, not related to anything particular to that stock. For example, why was on Monday State Bank of India up 10-12%? What was the thinking that if BJP gets 350 seats, what will happen to State Bank? It is a good bank, but there was no trigger from this angle. So I would say a little bit of this readjustment is happening. All I was saying was that readjustment need not be done with a 25% difference between the selling and the buying, even though it might be that over last 6 months it looks okay. I just psychologically cannot do it in a 2-day period with a 25% difference. But we also feel that maybe we can trim 4-5% out of our 20-odd% PSUs, but the rest have no connection with all this and are not also overly hyped, like the oil and gas companies. They are okay. They are at 7-8p, 6p. They have some development. They have high dividend. And it's not that the government, in terms of appeasement, can say that I am going to cut oil price and make the companies bear the loss. It can be that you can cut your taxes, please cut, nobody minds. Or be that if oil prices are low, then you cut price quicker. That also is okay. But some of this is assuming that now everything will change and you will become like your opponents in some sense. So I was quoting this, if you have seen Terminator 2. So in that, that fellow comes and he touches and he becomes that guy. You touch a policeman, so he becomes a policeman. So you touch Congress or whoever, now I will do every policy of them. You are supposed to do your policies and learn a little bit that what has gone wrong and adopt that also, and from tomorrow call it your policy.
Okay.
Siddharth, the beauty of having Samir ji on the show is that he can stitch together Bollywood, Bazaar.
In this case, Hollywood.
मैं actually B से B जोड़ रहा था.
I'll take one more question
yeah, of
with you,
course.
Samir, because I have with me something that is already was there yesterday, but I had missed that, and I want you to offer a perspective on that. CLSA, for example, has advised about making the portfolio more defensive, IT over capex. So they've taken out L&T from the India
Imagine.
focus.
And they put an HCL Tech.
So explain this, because this is going around the newsroom. Actually, my colleague Ankur Tyagi has sent it to me and said, please ask Samir Arora to explain what does
It
this
makes
mean.
no sense. But usse pehle chaliye. So they say, and many others say, that the Indian market is very expensive. Therefore, it is some one standard deviation away from our average premium relative to emerging markets and relative to Asia ex Japan or something, right? They say that in that same report. And then the stocks that go up today are the ones which have the highest valuation. All the consumer guys, all these all which are 50, 60, 70 multiple stocks are the ones which go up and which makes the portfolio defensive. But your first starting point was that the stock market in India is very expensive relative to other markets. Therefore, I recommend consumer stocks in India, which worldwide are recognized as the reason why the Indian market is at a premium to other markets. Second thing is, you are comparing with basically two universes, both of which have a very high China component, which is either an emerging market basket or a Asia ex Japan basket. So both of them have some 30-40% China. Oh, China has become 8-10 PE. So you, without going up, look like a premium to them. So China is maybe a trade, but China is not something which you will benchmark, because if Chinese market goes down, nothing related to India, then the Indian market looks like a big premium. So some fellow it's like saying levers looks very expensive by HPCL. That logic nobody buys, no. It's like different logic why HPCL has some change, why there is some change. You can't say randomly levers compare with HPCL or some very expensive D-Mart. No, sell D-Mart by Tata Steel because that is 100p, this is 5p. What logic is this?
You know, Samirji, in this kind of a volatile market, all that research houses do is churn reports by the next minute, and some of them obviously sort of tickle your brain.
Okay, there's some breaking news. Sorry to interrupt you, Shail.
Yeah.
The news report saying that Prime Minister Modi is going to take oath of office as Prime Minister once again on the 8th of June. Shall continue. I just wanted to bring that a bit of news in.
I thought 7th Saturday or maybe Sunday then.
Well,
so this is really big news. This is really big news, Siddharth, and this will sort of calm the markets, calm the fears, and also calm the volatility that is surrounding us over the last one day or so. But Samirji, continuing the conversation, lots of people are viewing you live on Business Today, and we have one gentleman, Mohit Yadav, who writes in asking a very simple question. Is this the right time to invest a lump sum in a mid and a small cap fund as of now?
So the mid cap, small cap, in general, they are more volatile, and the relative outperformance of mid and small to large caps has been very, very high. So, for example, if you look at 20-year performance of the market from 2000, that means March 2000 to March 2020, then the mid and small caps were slightly underperforming large cap, which means over 20 years, more or less their performance is the same. If you look at the US market for 20 years, the mid cap stocks were nearly the same as the diversified, like the 500, this thing. But from 20 to now, in India, the mid caps have massively outperformed. So if you believe, which I believe, that over time these things are not materially different, then the mid caps have to underperform large caps. Just like in the US for the last 4 years, the large caps have massively outperformed the mid caps, in their case because of those 7-8 stocks. So I would say mid caps and all are okay, but if you are investing in the middle of a passive outperformance cycle, you are not going to make materially higher, if at all. According to me, you will make less. But let us say, okay, this is something different. Mota Mati is like saying that in 2000 to 2020, if you had looked at it in 2017, it would have looked at the end of 2017 that mid caps is the place to go. But then you come up with 2018. If you had invested in 2007, you would have said mid cap is the place to go. Then you came up with 2008. The falls are also very big, and the falls come without them warning you that a fall is coming. So that is why a mix and match in life is always good, which is what we call in our terms flexi cap fund.
Flexi caps.
And Siddharth, let me just point this out. For the moment, Mr. Arora's flagship fund is, of course, Helios Flexi Cap, where he manages about.
Here, I'm not trying to promote my fund. I'm talking about the concept that
Yes.
we also, in our first fund, could have started with a mid cap fund. Because if mid cap is now getting disproportionate money in the mutual fund industry. So, and it was getting even more disproportionate last year. So, in November last year, we could have said that there is more money coming into mid caps. We have good history in discovering ABC 100 mid cap. So, let's do a mid cap fund. So, this is the practical, this thing that we also chose, that it is too big a difference to start with a mid cap fund and feed into that frenzy. So, but if you still want to invest in mid cap, then definitely do it, over 3-6 weeks or quarters, or slowly, and do a mix and match is the best. But if you do flexi cap, please consider ours.
Just a word of site that I've just seen in your fund, which I've been tracking for a while, which is the Helios Flexi Cap Fund. Siddharth, Samir ji manages about 1250 crores in this fund, and in the top 25-26 stocks that I have seen, there are only 4 PSUs, and all of them are very, very stable names. There is nothing which has taken a flight of fancy. These are names which are very, very well grounded into business. None of them show overvaluation, and just for the sake of our viewers' benefit, I am just taking names. Hindustan Petroleum is 3.3% of assets under management. BPCL is 2.5%. You have NTPC 2.2%, and of course you have Canara Bank 2% of AUM. So these are names which never flew high, and they are not burnt by the sun, as we've learned from Greek mythology. And at the moment, Helios looks to be a very sensible portfolio. The top 3 stocks are from the banking space, HDFC, ICICI and SBI in the same ranking, and the fund is doing pretty well. Samir ji, what a wonderful portfolio.
Thank you.
Samir, I want to ask you about this theme that we started the conversation on, because doubts and the lesser conviction that we may face continues. Do you think the markets in the next few weeks will continue to be very doubtful and worried about the stability of this coalition? Will that weigh significantly, or will attention then shift back to some of the more fundamental aspects?
So, that will depend on, as I said, on Monday or whenever we see the rest of the ministers, and little bit you guys and others will tell us about the deals and deals that have been done with the 2 coalition partners. Otherwise, it will look normally to a normal investor ki ho gaya, ki bhai, this is set now. Both the coalition partners have doing whatever they were doing, and they have got some share of power and maybe packages for their states, which is okay, nobody minds that. So it will depend on how, if for example, if on between now and Saturday, Sunday, you don't read much news of wheeling and dealing or counter pull from the other side, then it will look like this is a acceptable formula for all the 3-4 guys. The good thing is there are only 2 guys that BJP has to deal with, and since both are already otherwise in power, you can give them more things there instead of giving them 10 ministries or junior ministers. But even if you have 2, 3, 4 ministers, who will exactly care on 5th day? Maybe there will be a shock later, but who will wait and analyze that at that time? This will go on. Then we will worry about the budget, and most probably in the budget there will be 2 good things. I think now there is no chance of capital gains tax, because you don't want to shock the market after seeing what happened
That's
yesterday.
very clearly a headline. Samir Arora doesn't see any chance of a capital
I
gains
don't mind.
tax.
I want them to feel like that it should not be done. And secondly, my thinking is that a little bit to please everybody, you may do a little bit of a tax cut for the taxpayer, because there is this issue ongoing that the individual tax rate is higher than corporate tax rate, which is also one of the reasons that people were unhappy. And you do it notionally, you do a little bit, or you change the bracket, but you must be able to say that day that we are passing on some benefits of growth and other things. Plus, there are some things which the government has only announced, or at least not announced, but in discussion, which is to bring oil, gas, all these things under GST. All of them may not come, but some will come. That also is great for the PSUs, mostly the PSU, but also to show again that tax is being cut. These things are not going to cost obscene amounts of money. And separately, you do something about direct transfer or something, and not just wheat or rice, you send some money, whatever. That part is where people will worry how much is it. But this year, you've got $25 billion from Reserve Bank, and maybe 5-10 would have been counted, but $15 billion is not bad for this year. Kya to kaam hua?
Absolutely.
Samirji, one last and tactical question. Were you shopping yesterday and today morning? If yes, did you buy into your existing holdings or did you buy a fresh stock?
So yesterday we did not go near any buying. Zero, because it was too dramatic. Today we thought that in the morning we will not buy, because normally, the next day what happened, at least in the past, which is not happening today, but generally what happens is that margins call come. Then the Americans wake up who were yesterday not bothered, or some UK guys who are going home early. So normally these things last up to like next day middle schedule, somewhere plus minus. So we haven't done much. Maybe the India guys have bought something because they keep getting mutual fund flows every day, but I have not bought anything. But plus minus half of one day, I will have to do all this. At least for some stocks, I will do. Let it stabilize. We were anyway quite, because my fund is a long short fund. So my net is quite high. So I have to recover my yesterday's losses first a little bit.
Absolutely. And let things stabilize. That's very, very...
Plus minus a few days, 2 days, 1 day, maybe tomorrow, maybe today evening. You are there now because it looks all set.
Okay, Saturday to Saturday really, and if Saturday is the date for the swearing in, I think from Monday onwards we'll have much more sanity prevail in the market. Samir Arora, as always, thank you very much for your time.
What a pleasure.
With us today. With that, it's a wrap. We'll slip into a short break, but don't go away. 1:30, we are back with more, and at 1:30, Shell and I will be sitting down with Vijay Kedia. So keep your songs ready, and the questions, do send them in, and we will try and take them with Vijay. See you soon. Hello and welcome to Business Today Television. It's the big